Hello and welcome everyone to the week ahead commodity report, where we of course will be reviewing the markets for the week ahead. Historically, the final quarter of the year, from October through to December, that has always been considered one of the most lucrative periods of the year for commodity traders, and this year should be no exception. As the third quarter comes to an end and the final quarter of 2022 begins, we are heading into a highly lucrative, event-driven period filled with a magnitude of back-to-back trading opportunities, including the final three employment reports of this year, a series of market-moving central bank policy meetings from the European Central Bank, the Fed, the Bank of England, as well as an array of global inflation readings, all topped off with the US midterm elections. This cocktail of explosive events, which traders will not want to miss out on, is guaranteed to be a license to print money and drive market sentiment over the next 90 days. In fact, Goldman Sachs, JP Morgan, Bank of America, they've already begun preparing their clients for what they predict could be one of the most profitable quarters ever seen. If you've been kicking yourself for missing out on some of the biggest trading events so far this year, and you still want to make 2022 your best year yet, then you've just been granted the ultimate opportunity. Right now, we have crisis on top of crisis, which, as traders know, translates to opportunity on top of opportunity. This is the time that traders, they wait decades for. It's time like these that present a gift for regular people with an ultra rare window of opportunity to achieve enormous financial success. Already a lot of traders out there that have completely missed some of the biggest and most incredible opportunities already this year. The ones that took action, they have created life-changing wealth. You don't want to be the person who knew about the huge opportunities currently lining up, had a chance to capitalize on one of the greatest wealth transfers ever in history, and you missed out again. There's no denying that global markets, they have entered an exciting new phase. After being criticized for being too slow to recognize inflation, the Fed and its central bank peers, they have embarked on the most aggressive series of rate hikes since the 1980s. As a result, there's really nothing historical you can point to for what's going on in the markets today. We are seeing multiple standard deviation moves across every asset class, presented traders with back-to-back money-making opportunities on a daily basis. Aggressive moves specifically from the Fed. In recent months, they have strengthened the dollar, raising concerns among economists that the dollar will be the next asset bubble to burst. According to economists at Morgan Stanley, such US dollar strength has historically always led to some kind of financial or economic crisis. Last week, the International Monetary Fund, they also issued a warning not to underestimate the inflationary effect of a rising dollar on the rest of the world. It's against the strong dollar backdrop that the Bank of England, they have been forced to revert back to unprecedented quantitative easing measures, which is to avert a full-blown financial crisis. In one of the most major U-turns in monetary policy ever seen, the Bank of England went into full financial crisis mode last week, rushing out an announcement that the central bank, they were restarting their money printing presses at whatever scale is necessary, officially confirming that QE to infinity and beyond was back. The UK bank's extraordinary new round of quantitative easing, that will involve suspending a program to sell gilts, part of an effort to get rapidly surging inflation under control, and instead revert to buying long-dated bonds at a whopping rate equivalent to over $5.3 billion a day. Central bank interventions of this scale have not been seen since the Wall Street crash in 1929, the Black Monday stock market collapse in 1987, the global financial crisis in 2008, and more recently the 2020 pandemic. The Bank of England's announcement, that sent a long list of metals from aluminium, copper, palladium, platinum, gold, silver, lithium, uranium and zinc prices surging to multi-month highs, registering their biggest one-day moves this year, whilst gold and other precious metals priced in pounds that hit all-time record highs. The bullish momentum also spilt over into other commodities, with energies to soft commodities notching up impressive double-digit gains. And this could just be the beginning. The Bank of England's actions, they represent the first big intervention from a G7 central bank in this monetary cycle to avert a global financial crisis, and it may not be the last. According to Bloomberg, Billions in credit default swaps carried on the books at Credit Suisse, they are now close to the same levels they were during the 2008 Lehman Brothers collapse. At the same time, its stock is tanking even more than during the financial crisis, prompting the odds of a significant policy pivot yet again from another major central bank. Over the weekend, Credit Suisse's chief executive said the bank is at a critical moment as it prepares for its latest overhaul. Monday could now be on the verge of turning into Black Monday, which has provoked an immediate reaction from the Federal Reserve, calling an emergency closed board meeting on October the 3rd. The big question now is whether the Fed will be the next major central bank to switch back on their money printing machines and revert back to quantitative easing. Only time will tell. However, the one thing we do know is that extraordinary times, they do create extraordinary opportunities. Right now, this market is a trader's dream, packed with an unlimited money-making opportunity. Elsewhere on the radar as we go into next week will be the closely watched US jobs report and the hotly anticipated OPEC meeting, which always has the potential to move the market significantly. If you've been kicking yourself for missing out on some of the biggest trading opportunities so far this year, and you still want to make 2022 your best year yet, then you still have time. Go to jointhegoldandsilverclub.com right now to find out more about our mentorship program. So with that, let's move over to the charts and we'll talk you through exactly what we're looking at here as we head into a new week. First of all, moving over to gold, exactly as we anticipated after we saw gold at the beginning of last week, priced in pound dollars, break out to all-time highs. Our expectation was that we were going to see gold get a bid and there would be a great buy opportunity yet again, back down towards the 1,600 US dollar per ounce zone. Of course, that all played out perfectly because of the Bank of England, which came in with their emergency measures last week on Wednesday, emergency QE, and with that, we immediately saw the metals start to catch a bid. So we took the opportunity to quickly sniper in to a number of positions on gold, on platinum, and also on copper as well. In fact, on gold, just within the matter of 2 sessions, we were able to bank 400 points there on Friday. We also capitalized on the recent sell-offs that we saw on copper, so getting in the middle of the week before we had this big breakout to the upside, over a 1% move to the upside last week, and platinum as well. As you know, platinum also caught a 3-day impulse move too. We were able to get into additional positions on Wednesday, just after the Bank of England made their emergency response to the markets. With that, we of course saw platinum break out to the upside. As I mentioned, silver also broke out, so silver closed the month of September up over 6.5%. Copper as well, catching a bid, breaking out over 1% for the week. And of course, we also saw palladium prices, they broke out 4% to the upside last week. And also Brent crude oil had its biggest one-day move in over 10 weeks. And with that, we also saw the dollar pull back as well on Wednesday through to Friday, pulling back just under 1%. Now, what is very encouraging at the moment, given where we are with many of the metals, is that we also saw GDX that had a significant breakout last week, up 7% for the week and 2% to the upside on Friday. So as you know, typically GDX, which is the gold miners, this can often lead the other metals higher. And this is what I would be looking at now as we transition into a new quarter and as we move into a new month, into October. Now, it won't be without volatility, because as we move into next week, we're going to see China on a 1-week public holiday for their national holidays, and we've also got Israel off on public holidays over Tuesday and Wednesday. So during thinner liquidity in the market, this certainly does create more exaggerated moves. And as you know, we like to be nice and early to the moves here, snipering in. So we've got in much earlier on positions here where we're able to actually bank 400 points on Friday when we broke out to $1,675 per ounce and benefit from that huge impulse move higher that we've had from Wednesday through to Friday, and then start protecting those trades as well. So therefore, going into next week, we're really ready for anything. If we get further breakouts to the upside, we will definitely benefit. If we get further pullbacks, I would look to sniper in at similar or lower prices to where we've been buying positions in the last week here, taking advantage of this momentum to the downside at the start of the week, where we did see, of course, the dollar index initially, it was breaking out to 20-year highs. Subsequently, from Wednesday onwards, the dollar has pulled back, and that slingshot move that it provided for many of the metals here put us in a windfall amount of profit by the end of the week across many metals such as gold, platinum, copper, and also silver as well. So it's been really a perfect week to capitalize on that volatility. I do hope that many of you have been following our reports. We're also able to buy in at much lower prices on the metals there after the Bank of England's emergency response. We subsequently saw metals, they catapulted to the upside. Alongside that, we also saw, of course, alongside the Brent crude oil, breakout natural gas as well. That's been a volatile market, but it's given very quick profit markets as well. It's ranging 300, 400, 500 points within a single day. And of course, this time of year, natural gas is definitely a market to have on the radar as you move into the final quarter of the year, which is typically a strong time of year for this market. And also, as you move into next week, you definitely want to have crude oil on the radar. OPEC and oil producers, they will be considering cutting output by more than 1 billion barrels per day when they meet next week on Wednesday. As we enter a new economic climate, the importance of having an essential income-generating skill like trading, that has become a must-have necessity. If you want to actually reach your long-term financial goals in these rapidly changing markets, then you can't just stockpile cash in a savings account, because rapidly surging inflation, that will erode your wealth and purchasing power. Instead, you need to make your money work as hard for you as you've worked hard for it. One of the biggest obstacles that holds 95% of retail traders back from achieving their desired success, it's not having access to the correct professional strategies, institutional level data, and market intelligence to make confident decisions with accuracy in these highly profitable markets. If you follow the wrong strategy, or worse still, if you lack access to the right data at the right time, you will end up wasting lots of time, money, and effort and have no results to show for all of your hard work. In these fast-moving markets, data is power. You need to keep evolving and adapting, but most importantly, you need to utilize a research-driven approach to ensure that you have the ultimate edge to capitalize on each big move with accuracy and precision. Technical analysis and outdated technical indicators, they will not work in these markets. Those days, they're long gone. If that's all you're relying on to get edge in these markets, you'll end up FOMOing in and missing out and getting chopped up. The greater your data and intelligence, the greater your edge. You need to know how the hedge funds and banks are positioning themselves in the markets, where they're buying, where they're selling, so that you can get your timing precise. Key liquidity zones, fundamentals, macroeconomics, seasonal cycles, intermarket correlations, just to name a few. As we transition through the final quarter of the year, we are heading into a highly lucrative event-driven period. If you want to successfully navigate the markets and capitalize on the huge opportunities ahead to build substantial, life-changing wealth, then you need to utilize a research-driven approach. Never underestimate what you can achieve in the next few months from now with the right guidance and mentorship. You can always give people the right skills, knowledge, and strategies to transform their financial future. One thing you can't give them back is the time they have lost. Time is the most valuable commodity that we have. Make sure that you don't waste it. If you want to join a community of successful traders and take your trading to the next level, there is an opportunity for you to do so. As a member, you get access to our exclusive live trading room webinars. You get access to real-time trade ideas, access to institutional research and market intelligence, access to our private Members Academy website, and also support and one-to-one mentoring. For more information, just go to www.jointhelivetradingroom.com. The link is also below this report in the description, so just click on the link, make an application, and we will of course get in touch with you ASAP.